Welcome back to the Dinar Daily. Have you ever walked into a major U.S. bank holding your Iraqi Dinar or Vietnamese Dong and been met with blank stares, polite confusion, or straight-up refusals? If you have, you're definitely not alone. Thousands of people across America are asking the same question right now. When will U.S. banks finally start exchanging these currencies? Well, today we're cutting through all the hype, the speculation, and the endless online rumors to bring you real fact-based answers. We didn't rely on social media chatter. We went straight to the source. What we found after contacting dozens of U.S. banks might surprise you, shock you, and more importantly, help you understand what's really going on with your dinar and dong holdings in 2025. Stick around until the very end, because what we discovered could save you time, money, and maybe even protect you from making a costly mistake. Over the past month, we launched one of the most detailed investigations ever done on this topic. We reached out to more than 30 different banks across the United States, from big names like Bank of America, Wells Fargo, and Chase, to smaller regional banks and even local credit unions. We weren't looking for gossip or speculation. We wanted real, verified information directly from bank representatives. And the results were crystal clear. Some banks had at least a basic understanding of the situation, but many didn't even have a defined policy for dealing with the Iraqi dinar or the Vietnamese dong. Out of all 30 institutions we contacted, only 3 had written official policies regarding these currencies. The other 27 either didn't handle them at all, or had staff who had never even heard of any exchange procedures for them. That alone reveals something important. These currencies are simply not part of mainstream banking exchange systems in 2025. Let's start with Bank of America. As one of the largest and most influential financial institutions in the country, we figured they might have some answers. When we contacted their foreign exchange department, the response was polite but firm. The representative confirmed that Bank of America does not currently exchange Iraqi dinar or Vietnamese dong for US dollars. When we asked if that could change anytime soon, the answer was straightforward. Their currency list is reviewed every quarter, but there are no current plans to add either currency. Interestingly, they did mention they still receive between 10 and 15 calls every single week from people asking about these two currencies. That means public curiosity remains strong, even though the bank's stance hasn't budged for years. Next, we turned to Wells Fargo, and their response gave us some of the clearest insight into how major banks make these types of decisions. A representative from their international division explained that Wells Fargo actually stopped exchanging Iraqi dinar back in 2019. The reason, according to them, came down to operational challenges. In plain English, that means managing these currencies wasn't practical or profitable, the demand was low, and the regulations surrounding them were complicated. As for the Vietnamese dong, Wells Fargo has never offered it for individual retail customers. However, they do allow large institutional clients, mainly corporations doing business directly in Iraq or Vietnam, to process such transactions. But there's a big catch. You'd need a minimum of $50,000 in currency and prior approval from their international banking team. So for everyday people, this option is simply off the table. Then there's Chase Bank, the second largest bank in the U.S., and their message was short, clear, and final. We don't exchange Iraqi dinar or Vietnamese dong, and we have no plans to start. That's what one of their representatives told us directly. But they did share something very interesting about how banks decide which currencies they'll handle. According to Chase, there are 3 main criteria. First, trading volume in global markets. Second, the stability of the issuing government. And third, overall customer demand. Based on their internal analysis, both the dinar and the dong failed to meet those thresholds right now. So in short, it's not personal. It's purely business. If a currency doesn't have enough trading activity, stability, or demand, banks simply won't take the risk. What about credit unions, though? Sometimes smaller financial institutions can offer more flexibility than big national banks. So we decided to find out. We contacted 10 credit unions across several states, and the results were mixed. For instance, Mountain View Credit in Colorado told us they occasionally help members exchange foreign currencies, but not directly. They work through third-party currency services, which means you could end up paying hefty fees, sometimes between 8% and 15% per transaction. Meanwhile, Navy Federal Credit Union, one of the largest credit unions in the U.S., had a very strict policy. They only allow currency exchanges for travel-related purposes, and both Iraq and Vietnam are currently listed as restricted countries for security reasons. That means even if you're traveling there, they won't exchange those currencies. With most major banks and credit unions out of the picture, we turned our attention to third-party currency exchange companies. We contacted 5 of the biggest ones that operate either online or in major U.S. cities. Some, like Currency Exchange International, do handle Vietnamese Dong, but only under specific conditions. You'll need a minimum of $4,000 and at least 48 hours notice. On top of that, they charge about a 12% margin above the official exchange rate. In simple terms, that means if you're exchanging $1,000 worth of Dong, you're losing around $120 just in conversion costs. And when it comes to the Iraqi Dinar, the story gets even worse. Most third-party companies don't handle it at all. They cite lack of liquidity and unreliable exchange rate data as the main reasons. Naturally, the next question we asked these institutions was whether that might ever change. And surprisingly, their answers were almost identical. Across the board, every bank and exchange company said they constantly monitor global currency markets. But they only add new currencies when 3 key factors align: consistent trading volume, clear customer demand, and strong regulatory stability. Unfortunately, neither the dinar nor the dong currently meet those conditions. It's not that banks are against these currencies, they just don't see enough business justification to handle them safely and profitably. To dig even deeper, we spoke with professionals in the financial regulatory space for more context. They made one thing very clear: currency exchange is demand-driven. Banks don't add new currencies out of curiosity or optimism. They do it when their customers actually need them. Think about the euro, the yen, or the British pound. Millions of Americans travel or do business with those countries every year. But Iraq and Vietnam, that demand simply doesn't exist at a meaningful scale. That's why the dinar and the dong remain what the industry calls specialty currencies, not mainstream ones. Beyond the policies and numbers, we wanted to hear from real people. One viewer from Texas named Mark told us he tried visiting 7 different banks in Dallas to exchange the Vietnamese dong he brought back from a trip. Every single one turned him down. He eventually found a local exchange shop, but they charged him a staggering 20% fee. Another viewer, Linda from Florida, said she inherited some Iraqi dinar from a family member who served overseas. After calling multiple banks, she was referred to online dealers, and the quotes she received ranged wildly, from $300 to $800 for the same amount of currency. That massive difference shows one major issue: there's no standardized or consistent exchange rate for these currencies in the US. So what does all of this actually mean if you're currently holding dinar or dong? The message from the banking industry is loud and clear. Major U.S. banks have no current plans to exchange these currencies. Your only real options right now are through third-party dealers, and that often means high fees, unpredictable rates, and possible risks. Because there's no regulated or transparent market, prices can vary drastically from one dealer to another. If you're holding these currencies as an investment, you need to understand that their liquidity, meaning how easily you can exchange them, remains extremely limited in 2025. Let's look at this from a practical point of view. If you absolutely need to exchange your Vietnamese dong, your best chance is with a specialized exchange service in a large city. Always call ahead to confirm they even handle dong, ask about the current rate, and check all fees before agreeing to anything. For the Iraqi dinar, your choices are even fewer. Most transactions happen through online currency dealers. Before sending anything, research their reputation carefully, read reviews, and make sure they're licensed and insured. Never send physical currency through the mail without tracking and proper insurance. Unfortunately, there have been many reports of scams and lost packages in this niche market. Stepping back, it's important to see the bigger picture. Over the past 5 years, U.S. banks have been reducing their foreign currency services, not expanding them. The reason is simple. The world is shifting toward digital banking and online payment platforms that make physical currency exchanges less necessary. The COVID-19 pandemic sped up that trend dramatically. With fewer people traveling internationally, the need for cash-based currency exchanges dropped sharply. So banks began cutting costs by focusing only on major global currencies and dropping smaller ones that didn't generate enough business. Despite all,